Hello traders. So the markets remain largely in a risk-on mode ahead of US CPI with US dollar under pressure as rate cut expectations continue to grow. We're looking at the FTSE to start things off here, and the UK 100 has bounced off the 21-day exponential moving average, keeping the short-term bullish bias intact. Yesterday, it formed a small doji candle following an indecisive price action on Friday. This doji candle suggests that the path of least resistance remains to the upside with limited downward pressure on the UK 100. It looks like from here the index could be heading to retest the all-time high that was hit a couple of weeks ago at 9,360. And ahead of that, there is interim resistance at around this level right here, which was tested on Friday at 9,256. This level was previously support. We broke below it, retested that level, and we held below. But as you can see from close up, this level is going to be pivotal in so far as the short term is concerned. If we go above it once again, this could lead to renewed buying momentum towards the all-time high. Short-term support now comes in at around this level right here at 9,185, marking the head of this hammer candle that was formed last Wednesday. We broke above it on Thursday of last week, and ever since then, the index has held above it. So for as long as this level holds, the path of least resistance will remain to the upside. In the FX space, the dollar remains largely under pressure, with the likes of the pound and the euro, and more recently the commodity dollars all showing relative strength against the US dollar. So let's have a look at a few currency pairs then, starting with the cable, which faces additional tests from UK data on Friday, with GDP, industrial production, and a few other economic pointers to come. Ahead of that, obviously, we have US CPI and PPI, and today we'll have the revisions to the non-farm payrolls report to look forward to as well. So among the major pairs to watch, the cable is looking quite strong. This is largely thanks to stronger than expected UK economic data that we've seen of late, but more to the point is the weakness in US dollar that's keeping the cable supported as expectations grow that the Federal Reserve will go for a rate cut next week, and that it will follow that up with at least one more rate cut before the year is out, possibly two. Which will depend obviously on incoming economic data. As far as the cable is concerned, it is testing this area of resistance between 135.40 to 135.88. This area is shaded in grey. We have tested this area on a number of occasions, and so far it has held firm. But if I draw a trend line connecting the more recent highs, you can see that the cable has today broken out above that trend line, suggesting that we will potentially climb above this resistance zone in the days ahead. So if we do clear this area of resistance, then my expectations would be that if we get a rounded retest of this area from above, we would see a potential bounce leading to a rally or a continuation towards the July high of 137.88. So that would be my main objective insofar as the cable is concerned. What it does after that remains to be seen, but for me, this path makes the most sense as things stand. Obviously, a lot can change with the release of economic reports from both sides of the pond in the coming days. Similar to the cable, the euro dollar broke out above its short-term bearish trend line, therefore clearing the path to a potential continuation towards the July high of 118.30. For me, that will be the next key level to watch. On the downside, 117, which was previously a resistance level, is now going to be the most important short-term support to watch. Below that is a shaded area that held on a number of occasions between 115.60 to 116.20 in recent days. The line in the sand for me, though, is the trend line, which has been tested on a couple of occasions. For as long as we hold above the trend line, the path of least resistance will remain to the upside. Now, the Aussie dollar is one of the more interesting currency pairs to watch given the ongoing risk-on sentiment and positive price action on the charts. Recently, we saw a move above the 200-day moving average, but the currency pair didn't really move too significantly above it. Instead, it consolidated for a long time, retesting this broken area of resistance on a number of occasions between 63.70 to 64.30-ish. And so far, this area has held, as you can see by the daily chart. Now, the last test of this zone came in at around 22nd of August. Since then, what's happened is price has rallied from there, breaking interim high of 65.68, therefore creating a short-term higher high. The next high that was hit in July comes in at 66.25, and we are not very far from that level at the moment. So it looks like the Aussie could be heading for a break above this level in due course. Now with that 65, 60-ish level broken, this level is going to be our first and most important short-term support to watch at around 65, 60-ish. In terms of resistance levels to watch, I mentioned 66.25. Above that, there's nothing obvious standing out from looking at recent price action. So watch out for profit taking around rand handles like 67, 68, 69, and so on, should we get there. Finally, the September 2024 high of 69.42 will be in focus next, should the bullish momentum continue. Now, a lot will depend on the incoming economic reports from the US, and if the data continues to point to rate cuts from the Fed, this should keep the US dollar under pressure, and therefore the major currency pairs supported. For more market updates and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.